$840 million. This is what Wall Street just bet on senior housing. Janus Living is a senior housing REIT that was carved out of Healthpeak Properties. They just launched an IPO on the New York Stock Exchange. This is the moment that validates what the data has been telling us for the last couple of years. Let me break down what's actually happening here. Healthpeak is one of the largest healthcare REITs in the country. Basically, they looked at their portfolio and said, our senior housing assets are valuable enough to stand on their own as a separate public company. This is an institutional conviction. This is now the only publicly traded REIT in the US focused exclusively on senior housing, the only one. And the larger institutional investors, they committed $300 million before the shares even priced. And then the demand became so strong that they had to increase the deal. They originally planned to sell about 37 million shares, and they ended up selling about 42 million. But here's where most people will miss about this story. This isn't just an IPO, it's a signal. When a $6 billion company is created specifically to own and operate senior housing, it tells you something about where capital sees this next decade going. And you know, the fundamentals are driving this. We know this. Occupancy is at about 88.7% on average, the 17th consecutive quarterly increase. Inventory growth is below 1%. We've talked about this. It's the lowest since they started tracking it in 2006. We need about 100,000 units a year up to about 2040, and we're only building 4,000 a year. That's a $275 billion development gap by 2030. And this year, the oldest baby boomers turn 80. That 80 plus population is growing by about 700,000 to 800,000 people a year. But here's where I think most people will get wrong about this story. I made a video earlier this week about Blackstone losing $600 million in senior housing. And some people might wonder, is she telling us Wall Street is good or bad for this sector? Here's the answer. The capital is welcome. We need it. But capital without the right operator is how you lose $600 million. Janus Living proves the money is coming. Blackstone proves the money alone isn't enough. You need partners who understand what senior housing is all about. And it's not just about a spreadsheet. It's about someone's home, someone's mom. This is the difference between investing in senior housing and investing in senior housing well. I spent 20 years watching business do this in markets across Africa, not charity, business, commercially viable models that serve people and sustain themselves. That's what senior living is when you get that operating model right. Now, Janus Living was oversubscribed. Most individual investors didn't get a chance to participate, but that doesn't mean investors can't invest in senior housing. There are other opportunities to get involved. But here's the question I'll leave you with. If you have capital, you have choices about where to put it. And if you're interested in this sector, I believe the lesson from Wall Street is clear. Find opportunities where senior housing is done well, with operators who understand that these buildings aren't just assets. I think that's possible in this sector, and that's exactly why we're here.